Good afternoon. This is Rupert Thompson, Chief Investment Officer at Kingswood Group. And what I'm going to do for the next few minutes is really just run through the key events for the markets last week and also our outlook for the markets over the coming weeks. Well, equities actually had a slightly better week last week. Global equity is up 2% or so, but it's been a fairly choppy affair for the last few weeks, to be honest. Up one week, down the next, up the next, etc., etc. And really, I think markets are being buffeted one way or another by the latest developments on a number of fronts. So what we're talking about is the latest developments in terms of the economy, latest developments in terms of policy stimulus, and then obviously, arguably most important of all, latest developments in terms of COVID. So in terms of the economy, actually, we saw a fairly hefty bounce in retail sales as lockdowns were lifted in May in both the UK and the US. So sales are up of the order of 15% in both economies, and they have now recovered a good part of the decline in April. But having said that, they're still some way below where sales were before pre-COVID. And the big question going forward is how quickly will they recover the ground which they still need to recover in order to get back to where they were at the beginning of the year. And really there's a tension here between people who have been lucky enough to retain their jobs, who have clearly been rebuilding savings during lockdown, and now, if they've got the inclination to do so, have actually got some spare cash to go and spend, and the tension between those who actually have been furloughed, who are in danger of losing their jobs down the road, and clearly are probably not going to be in a mood to spend at all. And it's really sort of a balance between these forces in terms of how much further rebound in retail sales you're going to get. So that's one source of uncertainty. The other sort of continuing focus for the markets is what's going on in terms of policy stimulus. We had a Bank of England meeting last week, and really no big surprises here. Essentially, they kept rates unchanged at a minuscule 0.1%. But what they did do was increase their bond buying program. They had increased it by 200 billion earlier in the crisis. They've increased it by another 100 billion. And essentially what's been going on here, the stimulus you're getting from the bank isn't as important as the direct sort of support you're giving to individuals and companies from the Treasury, but it's still sort of pretty important what the bank's doing. And essentially they've been buying up all the government bonds the government's been issuing to finance these big stimulus programs. And essentially by increasing their bond buying program, this means they're going to have the capacity to go on buying gilts over coming months. Not at the rate they were, but still this is continued background support from the Bank of England in terms of propping up the recovery. The other sort of big question mark is what's going on in terms of the virus. And really last week you had some good news and some bad news. The bad news was that you've still got this renewed outbreak in Beijing. You've also now got an outbreak from an abattoir in Germany, and also in several other states in the US where they've opened up faster than others. You're getting infections picking up again. So certainly you're getting sort of localized, renewed outbreaks of COVID, and the danger clearly is that this spreads into more generalized outbreak, and then you get these lockdowns needing to be reversed significantly. So that's the danger. The good news though, and there was some good news, was that there's been trials on this new old steroid drug, which has been found to be quite effective in terms of reducing death rates for seriously ill people with COVID. So mixed news on the virus front. And I think really over coming weeks, the markets in a way are going to continue to be buffeted by these various conflicting developments in terms of the economy, in terms of policy stimulus, and indeed in terms of what's going on with the virus and infection rates. So very much we still think it's going to be a choppy affair for markets over coming weeks, coming months, and there's still the danger of a correction just because markets valuations are once again looking on the health side, on the expensive side. One change to policy we have made in the last week or two is actually to add to our healthcare exposure. There's been two big winners from COVID in terms of sectors within the equity market. The first is technology, for obvious reasons. It's very much sort of hastened as it were, the digitalisation of the world, both for businesses and individuals. So the technology sector has continued the outperformance it's been having for the last few years, and in a way it's given it another leg. And very much we stick with our bets there, our positions there, our specific exposures to the technology sector. In a sense, all COVID has done is really reinforce the trends which are already in the favour of the technology sector. And one sector which has actually now looking pretty well placed is the healthcare sector. Again, for pretty obvious reasons, COVID means there's going to be more spending on healthcare down the road. And the important thing here is that rather like the technology, this is just reinforcing trends which are already in place. So very much you've got aging populations across the world, which means more spending on healthcare. You've got rapid innovation in the biotech space, and also actually another factor favouring healthcare at the moment is pretty attractive valuations. So anyway, for all these reasons, we have now made a new allocation to the healthcare sector, and we've actually financed this from some of our UK small and mid-cap equity holdings. And essentially these areas of the market have outperformed quite nicely since the market lows in March. But because we do think the economic backdrop is going to remain pretty difficult, these areas of the market are particularly exposed to the economy. We're not sure that they're going to outperform as much as they normally do at this stage of the cycle. So we think, in a way, it's a good move to add a bit more protection, you could say PPE, to our portfolios by adding an explicit healthcare exposure. So anyway, that's the move we've made recently, and I'll be back next week with any other policy changes we make, and indeed our latest thoughts on the market. Thank you.